Cognitive biases manifest in many different ways, more so when it comes to accepting new information. Traders will often anchor their decision on the first information they receive. There is no problem with believing legitimate information. However, doing so puts too much weight on it, such that you tend to block out dissenting opinions. This is similar to confirmation bias. So the market is the primary source of trading information, right? You've got fundamentals, you've got technicals, price action in front of you, and traders are keen on price changes and the general trend. So when a market starts off the day with strong bullish direction, a lot of people will likely believe this is the trend throughout the entire session, right? So they wake up in the morning, let's say it's a London session, they see that during Asia, price was trending a little bit higher. And so they think, okay, the trend is up. Let me continue in this direction. Lo and behold, what ends up happening is the Asia range gets broken to the other side. It's just Asia session tends to be a liquidity buildup, right? So if you've got an Asia range, I know of certain strategies that you can actually anticipate where there is going to be a likely hunt of liquidity. So, what they call stop hunts. Traders, particularly retail traders, they get fooled into thinking that because the most recent price action during Asia did something, they would tend to continue that pattern. Whereas if you backtest it properly, you'll find that the London session, it whipsaws Asia quite often. And so you need to be really careful with this bias, because if you're anchoring information and you end up blocking out really important information, and this is really difficult for your decision making and problematic on your performance. So what ends up happening is that traders fail to ignore that this was just the first signal from the market. Everything else after it doesn't matter. So if the trend reverses over the course of trading, you can guess who will lose out. So many cognitive biases seem to inhibit traders from getting a broader picture of the market. The anchoring bias similarly makes traders fight the market because they believe that they know it to be true. Being stubborn enables anchoring bias. And if you want to rid of this bias, if you want to fight this bias, you got to be flexible. You can't be stubborn. As a trader, there's this elimination of the ego. You have to be aware of your ego, and you have to be willing to let go day after day, day after day. And the ego can work in both losing streaks and winning streaks. When you win a few trades, let it go. Don't let it get to your head. If you lose a few trades, let it go. Don't let it get to your head. Try and always be calm and composed, balanced, right? Don't attach yourself to the outcomes. This is what I was saying in the beginning about focusing more on the process as opposed to the outcome of each trade. Ideally, you would consider past data so that you get a bearing on what the market is doing. Also taking into account new information. You have to be in the know, of course, while you're trading. Therefore, lose that anchor that is leading you blindly. This is the same as the confirmation bias, that you need to look at opposing views, look at the facts that are opposed to your view, look at the ideas, look at the setups, the fundamentals, the technicals, other traders, and not necessarily always taking your opposing view, but just be aware of it. Because if you're following too blindly your ideas, this is when the emotions can get really out of hand. This occurs a lot to traders when they're first starting off. So in the context of Forex trading, we would often use our entry price as an anchor. So this is an example. This means that when our trade is at a loss, instead of cutting our losses and closing the trade, we will rather wait much longer to hope and see the price go back to break-even price, even though we are incurring much bigger losses than originally anticipated. The open price bears little meaning other than that it was the price we opened our order, but still we hold certain importance to that level. So another example is if we anchor our support and resistance levels. When we anchor on these levels, we often completely unaware of more important factors that could push price beyond these levels. Holding on to an anchor can prove to be dangerous for your trading, and knowing about these cognitive biases might make the difference between losing and winning a trade. And so even with our information on our charts, a trend line, whether it's an ascending, a descending, or a horizontal trend line, type of resistance and support, could be a moving average. If we anchor too much on this information, we end up ignoring very important information that's opposing our view. So yeah, anchoring bias is very similar to confirmation bias. And so you can have multiple biases occurring during your trading all in one go, and you don't even realize it. It's all happening on a subconscious level. Over years of developing your awareness of these biases, and by following your plan, they become a bit more conscious. You start to recognize the patterns of these biases occurring.